Hey everyone, quick sun check and then we can get started. Hope you're well. Getting ready for tonight's FOMC meeting minutes. Okay, sounds seems to be good on my side. Just a quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature as information or advice given does not take into account your particular objectives, financial situations, or needs. Therefore, at all times you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products that carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Okay, so I think there's a little bit of a delay. So if I get to your question a little bit late, do note there is a little bit of a delay. Okay, so we've got the FOMC meeting minutes. A couple of things to discuss. I think the biggest movers tonight is actually going to be in the indices. So unlike the other sessions, I think we want to focus a little bit more on the US 30, S&P 500, and the Nasdaq 100. We'll also take a look at gold. So I know there's going to be a lot of requests on gold. I think indices and gold is probably going to be the big movers for tonight. Currencies, we have seen a little bit of a movement following the PMI numbers. Yesterday it was a little bit of a surprise to the upside, so I think we're really looking at good numbers from the US fundamentals. The Eurozone is also improving. The UK numbers are also improving as well. Okay, so let's take a look at the S&P 500 first, and let me zoom out a little bit so you guys can see what's really going on. So we do have a little bit of a resistance coming in at around 78.6%. That's at 4,150. We are looking at a little bit of a pullback right now. So there's actually two things to look at. So generally, we have a much bigger trend to look at. And let me just highlight that for you. This is the bigger trend on the S&P 500. So we have a little bit of a bounce coming off the October 2022, and it takes us back to around 78.6%. So right now, that's one. The other thing that we want to look at on a smaller range, it would be this little bit of pullback here. Okay, so we've got two things going on at this point in time, at least on the stock market. So I'll just give you a little bit of an indication in terms of the risk sentiment. Is there going to be risk appetite in the market, or is there going to be risk aversions in the market? So I think this is really key in understanding where the market is going to be heading, right? So we can actually apply this onto the other assets as well. So we apply what we find out from the stock market and kind of give that reading towards the other major currencies. So we do have a very similar patterns going on in the pound USD and Euro USD. So this would be the S&P 500. So on a bigger trend, we are looking at a much bigger trend currently going forward. We do have a little bit of a correction in the short term. We have seen that correction basically from the run-up, the second run-up in December until about this month, right? So we are looking at a little bit of a pullback, but it's not significant enough to call this a downtrend. I don't think it's deep enough to call this a major correction in the market. Okay, so let me move these lines away. So I just want to highlight what's really going on here, and we can actually do one Fibonacci retracement here. We take a look at where it overlaps, taking a look at this one here, basically around 61.8%, 50%, we do have a little bit of an overlap on the support for the S&P 500. How does this translate into the intraday movement? If you take a look at the movement intraday wise on the hourly time frame, at least we are looking at a little bit more of a push lower to the downside for the S&P 500. But it's going to be limited because if we take a look at the much bigger picture, we do know there's going to be support building up around 3,000 900. But again, that's a really huge drop in terms of an intraday scale. Are we going to be looking at, a 100-point drop on the S&P 500? I don't think we are looking at that 100-point drop, but just to highlight, we do have support at around 3,900. Okay, so how do we navigate the S&P 500? Right now, we are still looking at a little bit more of a push to the downside, but it could turn dramatically different, right? Because if we take a look at what's really going on, we do have a little bit of a falling wedge going on the hourly time frame for the S&P 500. So we got 3,900, but that's really way off. It's basically about 100 points to the downside, and 100 points on the S&P 500 that's pretty significant, right? But we do know we have a little bit of support coming in at around 4,000. Okay, so this is basically where price is currently located. So if you're thinking, okay, what should we do with this one here? There are a couple of scenarios that can be, you can actually employ this couple of scenarios. So if we take a look at the lows, we actually don't have a close below 3,995. So we are going to keep a level on 3,995. If there's an hourly close below 3,995, then I think we are going to be looking at a little bit more of a drop to the downside. It's not going to be significant, but at the very least, in terms of your stop losses, it shouldn't be higher than 40.15, right? It shouldn't be higher than 4,015. Okay, so if you're thinking of going short and going with the current flow on the hourly time frame, then you can go short if there's actually a close below 3,995. In terms of how far it could go down, I'm not going to be targeting 3,900. I think around 3,970, 75. That's a reasonable target level intraday wise. What we could anticipate is that we might actually see a little bit of a spike to the downside if it does break below 3,995. We might actually see that happen. And is there going to be a whipsaw following the FOMC meeting minutes? That's again going to be dependent on the meeting minutes itself. Now, what's the big fuss with the meeting minutes? Two things to consider. Number one, the meeting minutes that was basically off the February 1st meeting, it's kind of irrelevant because that meeting happens before we've got all the good US numbers, right? Before the surprise NFP numbers, before the good CPI numbers, and better than expected PMI numbers. So, unemployment and stuff like that, right? So we got this meeting, that's the minutes that's going to come out today. That happens before all this new information. So how much of an impact this we don't know, but what would be the pointers is that what is the FOMC thinking about in the next few months, right? Are they going to be going with 25 basis points? Is that the plan that they have? I think there are two scenarios here. Number one is that there was a close call in terms of hiking 50 basis points on February 1st, right? But then they said they decided with the 25 basis points. So what we want to look from the meetings tonight is actually the meeting minutes tonight is actually what is their thought of the 50 basis points, what is their consideration for going with the 50 basis points, and why they didn't go with that 50 basis points. I think the market is a little bit, it's not really confused. Market is not confused, but I think market just wants a little bit more confirmation in terms of what the FOMC is thinking. I think that's basically what the minutes is going to be. The second scenario is that the FOMC might be thinking of, continuing with the 25 basis points. Either way, the scenario either way is that the FOMC is going to continue hiking rates. We don't have a confirmed economic projections. I think that's going to happen in the next meeting. But are they considering, maybe increasing the target range of the interest rate? So those are the considerations. Okay, so those are stuff from the fundamental side of things. But with the Technicals with the S&P 500, it is a little bit flat. The range is actually a little bit small. If we move on to the US 30, there are a couple of things to look at in terms of the US 30. Let's take a look at the US 30 on the daily time frame so we know where it is currently. Okay. We do have a little bit of support coming at 33,000 on the US 30. In terms of the Fibonacci for this one, that's from the December run up. We got that rejection at 78.6%. So currently this Fibonacci is done. So we have that very sharp rejection at 78.6%. It is rather flat at this point in time. If we break below 33,000, can we project any movement to the downside on the US 30? This one is based off a Fibonacci that's a little bit choppy, right? Currently it is at 127.2, so if it does break below 33,000, it's likely going to be limited at 32,800. So let's put in, we already have 32,750 on the hourly time frame, but that would be your potential target if it does break below 33,000. Again, I would be a little bit more cautious on this one here. This is not a confirmed pattern or anything like that, but it is shaping to be a little bit more of a falling wedge on the hourly time frame. So it is still pushing lower. I do expect a little bit more resistance to come in. Ideally, if we fail to go back up above 33,200, I believe. Let me just double check it. Yeah, about 33,200. As if we don't go above 33,200 before the meeting, I think we could be tracking a little bit lower on the US 30, right? If there's an hourly close above 33,200, then we want to place this as the support line, which is around 33,100. Okay. So I'm just squaring it off a little bit. Okay, so this is basically the range that we have for the US 30 intraday wise. So you can actually trade this breakout. If it does break above 33,200, it's going to be a little bit tougher to go up again. If it does break below 33,100, then we know at least that's going to be 100 points because we do have a little bit of support coming in at 33,000. But below 33,000, it's quite a significant move to the downside. If we count the distance, you know, considering a break below 33,100, that's looking at about 350 points to the downside. If the FOMC sounds a little bit more hawkish, and if they really considered the 50 basis points, and if they mention that, you know, that is what they prefer, because considering if there's actually going to be a delayed effect on their interest rate hikes, then they go with the 25, then we would consider it to be more of a hawkish tone coming out from the FOMC. That could send the indices significantly lower. Okay. So that's for the US 30. And Nasdaq, I think Nasdaq is a little bit better position at this point in time. We do have a little bit of support coming in at 12,000, and this support is still a little bit valid. If we take a look at the momentum drop on the daily time frame, the momentum is dropping really quickly. Price is not doing so. So in terms of the daily on the US 30 and this S&P 500, I think it's going to be a deciding factor tonight in terms of whether or not there's actually going to be future continuations in the stock market. If the momentum gets better, if the sentiment gets better and people are okay with the FOMC maybe hiking another 2 times of a 25 basis points size, then that would actually improve the sentiment in the market. Okay, but that's for the daily time frame. If we take a look at the Nasdaq on the hourly time frame, it's kind of following the same pattern. I think there's a little bit more of a push lower, although it's a little bit more limited to about 12,000 on the Nasdaq. Okay, so we do expect a little bit more of stronger support coming in at 12,000. Again, really concerned about the potential for a falling wedge on the hourly time frame. I'm not seeing any divergences on the hourly time frame. So if we lose that 12,000 level, then yeah, it could go significantly lower. But right now we do want to focus at 12,000 as our potential support. In terms of intraday resistance, that is again going to be at about 12,000. Can we do 12,100? No, it is going to be a little bit higher at 12,110. Okay, so we want to focus on 12,110. If there's an hourly close above that level, then we do have a little bit more of a potential move higher towards 12,200. Well, not really 12,200. Initially, you'll still face with 12,150. Okay, it's going to be there. So if it does break above 12,110, you might want to trade long towards 12,150. Beyond 12,150, you've got 12,200. Again, I much prefer to go short on the hourly time frame because the overall tone or the overall trend it's really strong to the downside. Although it's pretty limited, you do anticipate a little bit of support coming in at 12,000 for the Nasdaq 100. Now, let's take a look at the dollar index here. I think there's a lot of questions asked about the dollar index. Is the dollar strength, is it still going to be there or is it going to be done? At this point in time, it's a little bit unknown because we are currently between 61.8% to 78.6% Fibonacci retracement. If you round it out, it'll be about 104 to 104.50, right? As long as price is trapped within this range, it's too tough to call if there's actually going to be continuation and to the upside for the dollar index, or is it going to just reverse below 104? Because we can't use 104 anymore as an indication, if it's going to fail at 104, because we have seen price going in and out of the 104 level pretty much the last 4 trading days, right? Ever since Friday last week. So we don't really want to use the 104 level as an indication unless we actually see a strong push lower. If we have that push lower below 103.50, then we want to consider that the correction might have been done, because that would be a move below 61.8% on the current Fibonacci. Okay, so we want to focus on 103.50. If the dollar index falls below 103.50, then we would indicate that as a potential end to the correction on the US dollar. Okay, which lead us to, all right, let me look at the questions first. On USD, dollar, yen, euro, USD, Aussie, USD, yep. Okay. All right, cool. So we'll move on to the currencies. I just want to touch base a little bit on the indices because I think they're actually going to be the big movers tonight. With the currency for the Aussie USD, this one's currently within the Ichimoku cloud, at least that's on the daily time frame. The overall trend remains to the upside because, despite the dollar strength and whatever not. Let me just highlight what's really going on since October for you guys. It's basically still pointing to the upside. And we haven't seen a lower low on the Aussie USD as of yet until price, touch 67. Then we would consider that as a potential sign of reversal for the Aussie USD. But until that happens, we still have 68 cents as a support, at least intraday wise, for the Aussie USD. Okay, we have broken below 68.50, so the next one would be at 68 cents. So if you're trading this intraday, this is what you are going to be looking at. I think we might actually see a little bit of a pullback, at least on the hourly time frame. If price is maintaining the current base as of now, then you can actually use this Fibonacci. All right, any close above that 23.6%. Ideally close above 85, but 68.50, but it will take your stop losses a little bit higher. But I think it's okay. I think it's really worth it because it's still less than 50 pips in terms of your stop loss. So a couple of consideration: if there's a close to about 68.50, then you got two options for your stop loss. You can use the swing low, which is at about 68.12, or you can have it at 68 cents. I would have it at 68 cents. In terms of how far up it can go, maybe you're looking at around 68.75 initially, and then up to 69 cents. If price manages to close above 68.75, then you actually don't target 69 cents. You would actually be targeting about 69.50. That would be on the 127.2%. Can this happen? It could happen, because if we take a look at the overall view for the Aussie USD on the hourly time frame, it is actually flat. Now, if you are thinking, hey, shouldn't this be in a downtrend? It's actually not in a downtrend. It is in a rather range-boundy market condition. If we take a look at the range, we have extended this lower towards 68, but progressively, every 50 pips that you see on the Aussie USD, it'll be like a step ladder for the Aussie USD. Okay. So that's for the Aussie USD. Do I prefer a short on the Aussie USD? I would actually look at this as more of an opportunity. I think in terms of potentially going long on the Aussie USD, at least we have 68 cents as our stop loss. That's reasonable instead of going short and having a stop loss at around 69 cents. I think that doesn't make sense, right? So I much prefer this scenario rather than attempting to go short and having your stop losses all the way up there and then hoping that the Aussie USD is going to track lower. Again, this one here, the risk just doesn't make sense. So I wouldn't be looking for a short. In fact, I would actually be looking for a long position if you are trading before the FOMC announcement. Things might change after the FOMC announcements. We need to kind of figure out the meeting minutes. What is it really? But it takes time. But if we take a look at the momentum here, we might actually see a little bit of a recovery intraday wise leading up to the FOMC meeting minutes. I think this is also in line with the pound USD. Okay, so pound USD, this one don't expect crazy ranges. I think we broke above that 1.2050, but it was a little bit too late for a lot of people to catch on that trade because it broke the range pretty significantly. On this one for the pound USD, if there's an hourly close above 1.21, and we might actually see that happen soon, probably after this session, then yeah, you might want to consider going long on this one. In terms of initial target, it will be at 1.2150. It's not going to give you a great risk reward ratio, but you have a couple of options. Once price starts moving closer to 121.50, you could actually adjust this to 122, and then your stop loss, you can adjust that to about 1.2060, 75. I think that would be a reasonable level to adjust your stop loss. Then it makes a lot of sense. Okay. Do I prefer a long or a short on the pound USD? I would actually prefer to go long on the pound USD, although in terms of potential target is actually initially going to be very limited. You kind of need to scale out a little bit around 1.2150. If you're going to be targeting 1.22, make sure you adjust your stop loss once this one comes closer to 1.2150. Okay. If you're asking if there's actually any long-term position or swing positions on the pound USD, just as the outlook on Monday, it is flat. We are still range bound between 1.19 to 1.2450, and currently we are within the Ichimoku cloud. Okay. So this would be a consideration, considering the whole month of February. If we take a look at the pound USD, it's basically spending its time a lot inside the Ichimoku cloud. I think there's only couple trading days it doesn't touch the Ichimoku cloud. So for the pound USD, short month, it is rather choppy. It is still in a range bound market condition for the daily time frame, so I don't think that's actually much to say. If we do break above 1.2150, then yeah, I think we might track a little bit higher, but again, need to see what the FOMC meeting minutes is. I'm not going to be holding on any swing positions for pound USD. I would trade the day as normal, as long as it's within reasonable range. We got support at 1.21, 1.2050. We got our resistance at 1.2150, and then 1.22. So again, very similar to the Aussie USD. This is kind of range bound in about 50 pips range. Okay, I much prefer to go for a long at this point in time. At most you're risking about 55 pips, 50 pips at most for the pound USD. Okay, so that's pound USD. Next up, it's Euro USD. Euro USD, we have broken below 1.06, so that was the established range yesterday. At least early this week, we have broken below 1.06. So if we take a look at this one here, we have broken this. Sorry, I'll adjust it, but just give me 1 second. Okay. So we have seen this, and market got rejected at 1.0660. Unlike the Aussie USD and the Euro, the Aussie USD and the Pound USD, I would actually be a little bit more careful with the Euro USD. The overall tone for the Euro USD, it is going to be a little bit weaker, at least from the perspective compared to the Pound USD, as long as it's trading below 1.07. So let me give you an illustration on the daily time frame. I'll zoom in a little bit. Okay, so we're within the Ichimoku cloud. We are trading below 1.07. We are actually very closer to the 78.6% of the Fibonacci retracement at 1.06. Okay, so I think for the Euro USD, as long as it's trading below 1.0660, it's going to be a little bit more bearish for the Euro USD. We might see price pull back up a little bit, and we'll see if it actually manages to come and retest 1.0660. There is a limit to the rejection. It's actually not going to be at 1.0660. It's closer to about 1.0675. That will take this a little bit higher than the Ichimoku cloud, but there could still be the rejection that happens on the Euro USD. So for the Euro USD, I would actually wait because instead of going long right now, we don't actually have a significant base support on the Euro USD. So if you're thinking of going long right now, you need to place your stop losses at least at the low last week, right? Closer to what, 1.0612, but it's just 12 pips. Might as well just put it at 1.06. Now, if we do 1.06, that means we can't really target anything other than 1.07. So if you do want to counter whatever the market is doing right now, you can target 1.07. But we just don't have the right momentum for this potential move on the Euro USD. So there's two options, right? Either we go long and see if the market retests 1.0660 or 1.0675, or we would wait for a little bit more for rejection to come in, and then we have stop loss at about 1.07, and then we will target 1.06. Give or take the risk reward ratio, it's going to be pretty similar. You're looking at about 40 pips risk if you're going long right now. Potential gain is about 60 pips. If you're going short, if there's a rejection at 1.0675, 1.0660, you're looking at about the same stop loss level in terms of potential gain. It's also about 60 pips. So this one here could go both way, and I don't have a lot of conviction in terms of going long on the Euro USD as long as it's trading below 1.07 at this point in time. Okay. Right. So that's the Euro USD. That's the Aussie USD and also the Pound USD. Now take a look at the Dollar Japanese Yen. Dollar Japanese Yen, it's going to be a little bit more unique. I would say for the Dollar Japanese Yen, if we take a look at it on the daily time frame, we have exceeded 134.50, but it's actually still within the Ichimoku cloud. It's actually going to be a while before it actually transition out of the Ichimoku cloud. Even if it stays flat, you would actually see that transition happen next Tuesday or next Wednesday. So price needs to maintain that position for a week. So with the dollar Japanese yen, again, really critical if we actually see that rejection happen on the dollar index. But if we don't, then yeah, we might actually see more of a transition to the upside. But if you're trading this intraday wise, we would potentially go back inside this range here. So overall, the momentum still points to the downside. I think we're just waiting a little bit more of a confirmation if it does close below 134.50. If it does move back below 134.50, you can have your stop loss at about 135.25. In terms of target level, there are a couple of target levels. Initially, you would be targeting about 134. But if we do see that momentum building up on the dollar Japanese yen, then yeah, you can target 133.50 as well. So is it a good trade per se? It's an okay trade, but if you're looking at the potential risk, we're looking at a minimum risk of about 75 pips. I think with the Aussie USD, the Pound USD, and the Euro USD, they have a little bit more of a smaller pip in terms of stop loss. So yeah, it's not that you can't trade the dollar yen. It's just I think there's a lot more better options out there for the dollar Japanese yen. Okay. Do I prefer to go long or short on the dollar Japanese yen? A little bit unknown, because if we have the momentum is actually flat at around 50. So, you know, if we have that bounce at 134.50, then yeah, we would continue to the upside, 135, 135.50 for the dollar Japanese yen. But if we're looking at the current condition and it might actually close below the Ichimoku cloud, then we could see a little bit more of a pullback to the downside for the dollar Japanese yen. Okay. All right, so we got the Pound USD. New Zealand CAD, Aussie CAD, dollar yen. We've already talked about dollar yen. Aussie USD on the hourly time frame. The Aussie USD on the hourly time frame, I much prefer to go for a long at this point in time. Having a stop loss at below 68 cents. I think out of all the currency majors, I'm pretty okay with the Aussie USD. In terms of potential targets, initially you need to target 69 cents before you can actually target 69.50. Okay, so initial risk reward ratio is likely going to be about 1-to-1, but once we go beyond 69, obviously you can then adjust it 69.50. Do I see a potential return towards 70 cents? I think that would only happen if the FOMC meeting minutes, it's going to come out a little bit dovish. Then we might actually see that push towards 70 cents. Okay. All right, let me look at the sterling yen first, and then we can take a look at the crosses. Okay. All right. So sterling yen, we've seen a little bit of a run up on the sterling yen. If we take a look at this one here, we bypass a lot of resistances. We got past 162, we got past 163 at this point in time. I think we can measure a little bit of the correction here, right? This one, you can time it around 162.50. We are below 163, so I think we might actually see a little bit more push to the downside. I think about 162.50, if there's actually a bounce off 162.50, that would be a much more okay position to go long. But if it transition below 162.50, you need to cancel that potential long outlook. Okay, so initially we would want to see price coming back closer to the Ichimoku cloud and bounce off the Ichimoku cloud, and then you can target to whatever you want. You can go 163, 163.50. That's going to give you a good risk reward ratio, but this is only okay if price manages to stay above the Ichimoku cloud, right? If it bounces off. If price transition below the Ichimoku cloud like so, then you would actually need to cancel out this trade. Okay, we need to cancel it if it moved below 162.50. Is it time to go in for a long right now? I don't think so. I think we might actually see a little bit more of a push lower. So yeah, if we look at the timing, it will still be before the FOMC meeting minutes get published. We might actually see price come closer to 162.50. But yeah, if for the sterling yen, I would actually leave this alone. I would actually want to see a bounce off that 50%. Around 162.50, that would be the ideal scenario. And if that happens, I would have my stop loss at around 162. If you want to go for a little bit higher, you want to transition this into more of a swing trade, then you actually need to have your stop loss below 161.50, which opens up a lot of risks for you. Around 162 is okay because that would position it below 61.8%. So if we anticipate a bounce of 50% at 162.50, then yeah, I would consider a potential long over there. The overall trend remains to the upside for the sterling yen, at least on the early time frame. Okay, so that's the sterling yen. Euro yen. Let me highlight this a little bit on the euro yen. Right, so if I zoom out on the euro yen, this is something that's a little bit concerning. It's a little bit weird to see this pattern happens in a more of a range bound market condition. But regardless, we do have a little bit of a rising wedge going on the euro yen, and it's visible on the 4-hourly time frame as well as the daily time frame. It remains a little bit more of a push to the downside for the Euro Japanese yen. So we do have that support at 143. Now let me highlight a couple of potential support. Obviously, if we take a look at this one here, about 141.50, then closer to about 142.25 actually. All right, so there we go. If it breaks below 143, then yeah, the option is there for more of a continuation to the downside, because we have transition below the Ishimoku cloud. And if we take a look at the Senko span, it has actually turned bearish. Senko A is actually below B at this point in time, so we're actually looking at more of an added momentum to the downside for the euro yen. That's probably why, if I take a look at the euro, I think this has been the case for the month of February. I don't have a lot of confidence with the euro. If we take a look at the euro USD, is actually below the key level at 1.07. Pound USD at the very least, it's still above 1.2, 1.21. So I think I'm looking at a little bit more strength on the pound instead of the euro. So for the euro, couple of scenarios that you can consider. You might want to consider a short if it does break below 143, but in terms of target level, you need to be a little bit more cautious. I think we do have a potential support coming in about 142.50 to about 142.25. So that's not going to give you an okay risk reward ratio initially, unless it does go down really quickly. Then you can adjust your stop loss at least to about 143.75 ish. Then you can adjust your stop loss target level to about 141.50. This is a little bit more realistic, but it's going to be a huge risk for you, because initially, if you jump in on the break below 143, then your initial stop loss is about 120 pips. So it's kind of huge. Okay. All right, let's take a look at New Zealand CAD and the Aussie CAD. Okay. New Zealand USD, New Zealand CAD, Aussie CAD. Let's take a look at New Zealand USD first, right? Because there was a question asking if the inverted head and shoulder is still valid on the New Zealand USD on the daily time frame. The answer to that, it's still valid, right? We still have support pretty much at the right shoulder. We haven't broken that support. That's basically around 62 on the New Zealand USD. All right. So this is the current fib going on for the New Zealand USD. We have gone back and forth between 23.6 to 61.8%. So this fib is actually still valid, right? And we're still going by this fib. In terms of this one here, if it does break above 62.50, then I much prefer to go for a long position, right? Stop loss. It's really up to you. You can have it at 62. right? I think having it at 62 cents, it's reasonable in terms of potential target for this one. Initially, you would need to go for that 127.2%, very close to about 63 cents. And then the next one will actually be at about 63.35. Okay. It's not by much, but you know, the current situation for this one here, yeah, we might actually see if we close about 62.50, it would actually take the stochastics back up above the slow stochastics. It might actually trigger a little bit more of a run to the upside. I don't know for how long this run is going to be. Is it just up to the FOMC meeting minutes, or things change after that? But the current potential run is to the upside for the New Zealand USD, very similar to the Aussie USD. It is choppy, it is range bound, but I think it leans more on a little bit more of a potential run to the upside, at least intraday wise, for the New Zealand USD. New Zealand Canadian, this one here might be a little bit overdone, but let's check on the daily time frame. Let's take a look at the correction on the New Zealand Canadian. Very close to about 38.2%, so we can actually use that as a base. 4 hourly time frame, we haven't transitioned above the Ichimoku cloud. I believe, Chucks, you're using the 4 hourly time frame, if I'm not mistaken, right? So we haven't actually transitioned above the Ichimoku cloud, but if we do transition above the Ichimoku cloud, yeah, I think things could change a little bit. In terms of the current run for New Zealand Canadian, I think you might actually have missed the train, because this one has gone to 127.2%. The next stop for this one is at about 161.8%, closer to about 84.75, right? So current run, it might actually go to 84.75. Okay, right around there, you're likely going to find a little bit of a resistance coming up. So either you have a long position on the New Zealand Canadian, or if you're thinking of going in long, as risk reward ratio in terms of stop loss, you would need to have your stop loss at least 84.20. I don't think that's a really strong stop loss to have. I would actually have it a little bit lower, below 84.15. In terms of potential target level, you are looking at about there, 84.75. So it's just another 25-30 pips tops for the New Zealand Canadian. So I don't think this is a worthy trade for you to jump in, at least intraday wise. I would actually look away unless you have a running position on the New Zealand Canadian. This one here is a little bit risky. Okay. Aussie Cat, intraday wise, this one here, I'll just say it upfront, it is choppy. I can go into the 4 hourly time frame, the daily time frame, it all looks a little bit choppy. And if we take a look at the 4 hourly time frame, you're actually looking at a little bit of an established range on the Aussie Canadian. I think we are looking at about 92.25 as your potential key level to watch out for, which is very close to 92. So you might actually want to have 92.25 and 92. Yeah, I think 92.25 is sufficient. We might actually see a little bit of a pullback higher, but I don't expect this to break above 93. We might actually see a resistance coming in around 92.75. Yeah. About 92.75, you're likely going to find a little bit of a resistance on the Aussie Canadian. All right, so the sequences are a little bit off compared to the Aussie USD, but this is what we have. If you're thinking of going long right now, your momentum could just turn up above 20, then you can go long on the Aussie Canadian. Since the potential target level, it's still going to give you about 1-to-1 risk reward ratio, unless you're okay with this kind of range, like a 20 pip up and down. I would say I'd prefer to go for a long position, as long as you have your stop loss at the swing low intraday today. Okay. Right. We did take a look on the Euro Yen. The Euro Yen, For me, I'm more concerned if it breaks below 143. If it breaks below 143, then we might actually track lower, 142.25, 141.50 on the Euro Japanese yen. The only concern that I have is the current formation that we have. It's a little bit of a rising wedge. It's kind of valid if we just isolate it this way. Then yeah, you can actually clearly see that there's a rising wedge there, and price is actually falling below it. But if I zoom out a little bit, you'll see that this happens in the middle of the current range that's going on in the market since last year. So there's a couple of ways to look at it, but I would say the more immediate effect is that if there's a break below 143, it would more or less confirm a potential move lower for the Euro Japanese yen towards 142.25, potentially towards 141.50. I've already discussed the sterling yen, but let me just show you the sterling yen. With the sterling yen, I would wait for a pullback towards 162.50. I'm in a short position on the pullback to 162. So if you have the current pullback, would keep an eye out on 162.50 first, and then 162. If it bounces off 162.50 for the sterling yen, I would prefer to go for a long position on the bounce of 162.50. So if you take a look at the two lines there, if it bounces up, okay, I'll stay there. But if it crosses below 162.50 on the hourly time frame, it would take that below the Ishimoku cloud, then it would transition more of a push lower towards 162, 161.50, 161. Then I would actually don't want to go long the sterling yen. I will only go long. I'll just write it down, instead of only go long if 162.50 holds, no hourly close below it. Okay, so only go long if 162.50 holds and there's no hourly close below it. That's pretty much it for sterling yen. How do I easily determine targets, stop loss, and take profit? I use psychological levels. I use, like, for the Aussie USD, I know how the Aussie USD works, right? I'm Australian, so I know how it works, and it kind of get a staggered run every 50 pips. This is something that I pretty much look through every morning for my whole career. That would be the Aussie USD. Does it mean that I trade the Aussie USD? No, I actually kind of hate the Aussie USD. In terms of the range, I prefer the volatility given by the pound USD. So yeah, how do I find this take profit and stop loss so easily? It might look easy to you. It's not easy because I prepare for this, but it takes a lot of practice to get it a lot quicker. Okay, so that's my view on the sterling yen. So if you have a short position towards 162, you need to watch out for 162.50, because if there's a support or if there's a bounce of 162.50, then price might not go all the way down to 162. All right, please look at the pound AUD on the hourly time frame. Seems some overbought area, any sell opportunity, and in 4 hourly there's an ascending channel. All right, so pound AUD on the hourly time frame, we do see a little bit of a pullback, but is it going to be a significant pullback to the downside? Probably not. Is there going to be an ascending channel? You mean a potential flag? I more or less look at a potential flag. Okay, so let's take a look at the 4 hourly time frame. Let me just measure the 4 hourly time frame for you. If we take the 4 hourly time frame, we'll only have one fib, and that's the current fib. Can this form a little bit of a flag? Yeah, it could, right? If we have that stop around 38.2% max. Okay, we might actually see a little bit of a flag going on if that happens. So how does that translate onto the hourly time frame? Then the hourly time frame in terms of the projection, yeah, we might actually come off a little bit, but you need to consider a few things. You know how strong the run is on the pound AUD, right? I think sterling was the biggest gainer last night. If we take a look at that correction on the pound AUD, then you need to watch out for 23.6%. That's significant because that was where the market paused for a little bit before breaking up. So this here, right? And the next one that you need to watch out for would be the 38.2% because that's also where market pauses for a little bit. So the current projection on the 4-hourly time frame, if you're looking at a little bit of a channel, then it might actually form a flag. The flag might be valid. I'm just making a little bit of a projection because this is currently what I'm looking at on the pound AUD. The momentum right now, sure, it's coming off the 80 level. Can we consider it overbought? Yeah, it's a little bit overbought. But does it necessarily mean that we are going to see a little bit of a quick pullback to the downside? Probably not, right? But if we take a look at where the 23.6%, that's around 1.7670. If you want to round it up, it'll be about 1.7670, right? Or it's going to be at around 1.7620. You do expect a little bit of support going on there. Should you go short? If you're thinking of going short right now on the pound AUD, you would counter a really strong run to the upside. I wouldn't do that. And in terms of potential target level, it might bounce off 23.6%. I don't know if it's actually going to bounce off 23.6% or is it going to go all the way to 38.2%, right? Either way, if it bounces off 23.6%, you are going to risk double for a potential gain of 25 pips. Not worth it. If you're aiming for 38.2%, it might not go there immediately. So I would much prefer to wait for a bounce to happen rather than try and go for a short right now on a pound AUD. Unless you're just in for a quick 10 pips to the downside. Yeah, I think we might see a little bit more of a push lower, but I'm not sure if it's actually going to break below that 23.6%. If it does go even lower than that, yeah, I think we do have about 1.7650 as a potential target level. All right, given a give or take, I think you need to give about 55 pips to the market as your potential risk. All right, we haven't talked about gold. Any impact gold and USD dollar index due to the nuclear weapon issue? So far, it hasn't spilled over yet, so we don't have any issue as of yet. Right now, we do see a little bit of let's take a look at the dollar index, right? It's just hovering on 104. If the issue with the nuclear weapon comes into play, then we actually would see this above 104.50. So we haven't seen that happen. So we would wait for the FOMC meeting minutes to happen first before we actually see anything else. All right, gold. Let's talk gold. Shade, I think you're asking about your account. I think you should contact customer service for that. All right, let's take gold. Take a look at gold. The range that we established for gold, it's pretty much still there. In terms of resistance, we got 1850, 1860. In terms of support, we got 1825. That's still holding on true. Do we need this fib? At this point in time, we don't need this fib. Right now, it is flat. So if you think of trading gold, you need to consider that you need to trade within the current established range that we have for gold. So we actually don't have a lot of movement. I think we are waiting for more on the FOMC meeting minutes rather than anything else. So you got a couple of options, right? If you want to trade within the range, then trade between 1850 and 1825. You've got $25 to play around with. That's going to be your range, right? That's pretty much it. So as long as you trade within the range, then you're going to be okay. The problem that I have with this is that if you take a look at where prices, it's kind of smack in the middle. Okay, so it's not really helping right now because either way you want to go, your risk to reward ratio is going to be 1 to 1. considering where it is right now, if you're thinking, okay, this is above the Ichimoku cloud, then I should go long right now. Having my stop loss there, targeting 1850. I wouldn't recommend that because the momentum currently is pointing to the downside. Okay, but if we wait for price to break below the Ichimoku cloud to go short, then that's not going to give you a great idea. You're not in a great position either because your risk is going to be a lot bigger as well. So, best way to navigate the gold for tonight, because it's actually waiting for what the FOMC is going to be saying in the minutes to kind of give out the sentiment. If you take a look at the 4-hourly time frame, it's actually flat at around the fast stochastics. Those stochastics is at around 50, 48.82. Fast is at around 41. So it's actually still flat in terms of momentum. If you take a look at the movement here, it's a little bit choppy. If it does pull back higher, 1850, 1860 is going to be where it's likely going to get caught as a potential resistance. So we need to break above 1860 or below 1825, and that's a huge call because that would transition all trades into more of a swing trade on gold here. Take a look at the daily time frame. It's actually within the Ichimoku cloud, so that's going to be a little bit tough. Once it breaks 1860, it's actually still going to be in the Ichimoku cloud towards about 1900. There are rumors going around right now that central banks might be looking to buy gold at around 1800. So that could create a little bit of an artificial support or artificial demand for gold that would actually boost it temporarily. But it's kind of smack bang in the middle. If we wait for that turnaround on the stochastics on the daily time frame, then we need to break above 1860. If we don't break above 1860, then we actually don't have any momentum going forward for gold as well. So you might want to take the middle ground if you take a look at the 4-hourly time frame. Unless you are a short-term trader trading it on a 50-minute time frame, then yeah, go nuts if you want to, but just trade between 1850 and 1825. Okay, but what I'm looking at right now for gold, no matter what you look at, hourly time frame, 50-minute time frame, I think I'm looking at a little bit more of a choppy market for gold. Well, at least for the next 6 hours? You got about 6 hours. Yeah, break around there. It might get choppy here, like so. Okay, that's a little bit more realistic. Okay. So, this is likely what's going to happen on the 50-minute time frame. If you're trading this on the 50-minute time frame, it'll just go in and out of the Ichimoku cloud on the 50-minute time frame. So I'm looking at a little bit more of a choppy market condition for gold. I wouldn't go for any positioning on gold because it's right now smack bang in the middle between 1850 and 1825, just about 25 pips of range. All right, let's recap the Aussie USD. First, can you go long? It's closing above 23.6%. You could, right? As long as you have your stop loss at around 68 cents, you could. You want a bit safer, then you wait for that 68.50. Okay, it's okay. I mean, if you go in long right now, if it closes in 2 minutes, you can. Yeah, I think you can attempt to go long, but it's just a little bit too close for comfort. But yeah, it's going to be about 23.6%. You can go long in terms of your stop loss. I would want to give it a little bit more room towards 68 cents. It's not going to be much. It's just an extra 10 pips. Okay. All right, Euro USD. We already discussed Euro USD. This is the Euro USD. You can go either way. It's the first one you can go long, but the momentum is not on your side, so I wouldn't attempt that. I would prefer the second scenario rather than the first one. I would actually wait for price to pull back. So let me just delete that. I'm not going to be trading this because the momentum doesn't go the right way. I would wait for this one to go back up a little bit test 1.0660, 1.0675. If there's a rejection, then I want to go short on Euro USD, having my stop loss at above 1.07. If today the market move above 1.07, then don't consider going short anymore on the Euro USD. All right. Okay. We're on time for tonight. I gotta wrap this up on time for today, guys. So remember, FOMC meeting minutes. It's coming out in 6 hours time, I believe. Yep. Yeah, it's in 6 hours time. All right. The meeting minutes. It's not going to be the most recent thought of the FOMC, because the meeting minutes. It's for the meeting that happens before all the good fundamentals comes out from the U.S. So this is before the good employment numbers, before the good NFP numbers, before the good CPI numbers, better than expected PMI numbers, better than expected retail sales number. This is a meeting that happened before that. This is also a meeting that happens before the personal consumption expenditure. That is also the guide for what the FOMC is going to be looking at. Okay, so keep that in mind. Think what you need to dissect from the FOMC meeting minutes. If you get your hand on it, you might want to consider looking at the discussion where they discuss the 50 basis points and what are they saying about the consideration for the 50 basis points. Okay. All right, guys, let's wrap it up for tonight. Good luck with your trades, and I'll see you next week.